Welcome to Options and Ideas. Today's topic is future of Indian economy. What will be the Indian economy in next 5 years? One should expect something between 6.5% and 7%. Before the 2022-23 numbers came in, one would have expected that band to be between 6% and 6.5%. A 6.5% midpoint is in line with what SA has projected. This also has a bearing on India's medium-term growth prospects. Of course, the medium term needs to be defined. The next 3-5 years is different from the 5 years leading up to 2047. As economies grow, growth rates tend to slow down. Global economy growth momentum in economic activity slows towards the end of the fourth quarter of 2022-1. The last 3 years have seen the global economy endure a health crisis and a debilitating conflict in Europe. Governments and central banks of advanced and emerging market economies responded with stimulus measures in 2020 followed by restrictive monetary policies in 2022. Broadly, 2020 was about fiscal and monetary expansion to recover the loss of output induced by the pandemic. The following year, 2021, was about the fiscal, monetary expansion of the previous year, powering demand and recovering loss of output as governments showed lesser restraint on cross-border trade. The year 2022 witnessed a reversal of policies as the monetary, fiscal policies tightened to rein in prices that had spiked up with the outbreak of the European war. The rapidity with which monetary policy changed direction and sharply turned restrictive compounded global economic uncertainties already rife with anxieties about the European conflict and the persistence of the pandemic in some countries. 2. The rise in economic uncertainties is reflected in the unevenness of performance of the global economy across quarters in 2022. The output growth in the January to March quarter exceeded expectations as fiscally strengthened global demand continued to induce supply. Output growth in the April to June quarter slowed as the war caused an economic downturn in Russia, and zero tolerance for the re-emerging pandemic slowed output in China. As per IMF's estimates, growth in global output fell from 6.2% in 2021 to 3.4% in 2022. 3. Going ahead, global growth is forecasted to decline in 2023. This is mainly on account of the continued uncertainties emanating from the lingering pandemic and relentless conflict in Europe. In its January 2023 update of the World Economic Outlook, WEO, the IMF forecasts global output growth to decline from 3.4% in 2022 to 2.9% in 2023. The World Bank, in its January 2023 edition of Global Economic Prospects, GEP, estimates global growth to decelerate from 2.9% in 2022 to 1.7% in 2023. Economic growth in A is projected to decline sharply from 2.7% in 2022 to 1.2%. 4. In ENDEs, growth is estimated to have bottomed out in 2022. ENDE's growth is projected to increase from 3.9% in 2022 to 4.0% in 2023 aided by the reopening of the Chinese economy. About half of the ENDEs have been estimated to grow faster in 2023 than in 2022. The IMF and the World Bank project India to be the fastest growing major economy in 2023. This is despite the likelihood of India's exports showing tepid growth as the output of advanced economies, the major export markets of India, are forecast to decline sharply in 2023. Headline inflation cools down, and core inflation remains sticky in January 2023, however, they remained elevated compared to pre-pandemic levels, prolonging energy and food insecurity challenges. Crude oil prices have steadily declined from their mid-2022 peak but remain higher than pre-pandemic level. However, natural gas prices in Europe, which soared to an all-time high in August, have since fallen back to pre-war levels. Overall, global headline inflation peaked in the third quarter of 2022 and has been declining since then, notably in the United States, the Euro area, and Latin America. Headline inflation has also been consistently declining in India. Global trade is expected to worsen in 2023. Monetary tightening will entail a twin impact. It will reduce demand and, consequently, the volume of trade and, at the same time, lower prices and, accordingly, the value of trade. Trade is particularly subdued in EMDEs as they have strong trade linkages with major economies where demand is expected to slow sharply. As per World Bank, global trade growth is expected to decelerate further to 1.6% in 2023 from 4.0% in 2022. At the same time, IMF projected it to decline to 2.4% in 2023 from 5.4% in 2022. Union Budget 2023-24. The FY23 will close with India further strengthening its economic recovery from the output contraction induced by the pandemic. As global headwinds are likely to persist in FY24, India's policy regime must continue to be effective to ensure that the country's economic growth stays on course with macroeconomic stability. The Union Budget FY24 has ensured macroeconomic stability by budgeting a fiscal deficit of less than 6% of GDP. The budget has also announced key interventions to support the high growth of the Indian economy and bring weaker sections of society into the mainstream. Financing Growth. A National Financial Information Registry will be set up to serve as a central repository of financial and ancillary information. This will facilitate the efficient flow of credit, promote financial inclusion, and foster financial stability. Credit flow will be further boosted by establishing a subsidiary of Exim Bank for trade refinancing. To improve the ease of doing business, a single window system will be introduced to enable combined registration with an approval from different authorities, such as the IFSCA, the Goods and Services Tax Network, the RBI, and SEBI. It takes time for investors to reclaim unclaimed shares and unpaid dividends. Measures are being taken to ease and accelerate this process with an integrated IT portal to be established at the Investor Education and Protection Fund Authority. Focus on bank governance. With a view to improving banking governance, the budget has proposed to allow accumulated losses and unabsorbed depreciation allowance to be carried forward when a banking company is being amalgamated with any other banking institution or company in the event of a strategic disinvestment. Further, changes have been proposed to the Banking Regulation Act, the Banking Companies Act and the RBI Act, which are expected to improve investor protection. Simplification of the KYC process and adopting a risk-based, instead of a one-size-fits-all, approach will enhance credit disbursal by banks. Factors which are responsible for development of any country. There are various factors that play a vital role in the development of a country. For example, India is a democratic nation with widespread factors that help in the economic growth of the country. They are agriculture, international trade, education, health facilities. Real factors determining the advancement of any country. Real factors determining the advancement of any country. You can see below all the data. Average IQ by country and GDP by country listed below you can see. Child mortality by country and pollution index by country. Thank you for watching the video. For any query, contact us on the given number below.